Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world, one filing at a time. And get this, today we're looking at Armour Residential REIT and their latest announcement, and it seems like they're sending out a little something extra this holiday season, a dividend for their common stockholders. So if you've ever wondered how real estate investment trusts, or REITs for short, manage their money and pay out to investors, stick around. We're going to break down what Armour is telling us, and more importantly, what it might mean for you if you are invested or thinking about it. We also have a Discord community linked in the description below, so be sure to join us there for more discussions. Alright, let's dive into this. This is a report from Armour Residential REIT, Incorporated. Now, these companies, REITs, they own, operate, or finance income producing real estate. Think of them as big landlords or financial institutions for properties. And they often pay out a good chunk of their income to shareholders as dividends. Armour is a seasoned player here, filing with the SEC, which is the Securities and Exchange Commission, the US government agency that oversees the stock market. Now, before we get to the main news, it is good to understand what Armour offers. They have a couple of main types of stock. One is their preferred stock, specifically the 7.00% Series C cumulative redeemable kind. And this is traded on the New York Stock Exchange under the ticker symbol. Our preferred stock is generally less risky than common stock. And it usually pays a fixed dividend. It is like getting a steady paycheck from the company. Then there is their common stock with a tiny par value of $0.001 traded under the ticker R. This is what most people think of when they talk about owning a piece of a company. The value of common stock can go up or down more, and the dividends, if paid, can also fluctuate. So, why the filing today? The big news here, under item 8.01, which covers other events, is that Armour announced a cash dividend. They're giving out $0.24 for every share of their common stock. This is for the month of December 2025. Now, the details matter for getting that dividend. If you owned Armour common stock on the 15th of December 2025, you are going to get paid. And when will that money actually show up in your account? Mark your calendars for the 29th of December 2025. So, a little holiday bonus for their common stockholders, right before the year ends. This report also lists out the exhibits, which are just supporting documents. The most important one here is Exhibit 99.1. This is the actual press release where Armour put out the official word about this dividend. It is basically the public announcement that generated this filing. And then there is the cover page interactive data file. This is a technical thing for electronic filing, allowing computers to easily read the report. For us, the important stuff is in the announcement itself. Signatures, finally, we have the signatures. This confirms that the company, through its authorized officers, is submitting this report to the CC. And here we see it signed by Gordon M. Harper, the Chief Financial Officer of Armour Residential REIT, Incorporated. This means he is attesting to the accuracy of this announcement. Now, let's put on our investor hat and think about what this means. Armour is a REIT that focuses on agency mortgage-backed securities. In simpler terms, they invest in mortgages that are backed by government agencies like Fannie Mae and Freddie Mac. This is generally considered a safer type of mortgage investment compared to things like subprime mortgages. When it comes to dividends, REITs are structured to pay out most of their taxable income to shareholders, which is why they're often popular for income-focused investors. A dividend of $0.24 per common share for a company whose common stock trades on the NYSE is a fairly standard announcement. It signals that the company is generating enough income to return value to its shareholders. However, the key for any REIT, and especially for Armour given its investment focus, is how it manages interest rate risk. When interest rates go up, the value of existing mortgage-backed securities can decrease. Conversely, falling rates can increase their value. So, the real story behind Armour's stability and its ability to consistently pay dividends lies in its portfolio management and hedging strategies, which aren't detailed in this specific announcement but are crucial to its long-term health. This dividend announcement is a snapshot, and it suggests that for the period leading up to December 2025, their financial performance has been strong enough to support this payout. Looking at Armour's direction, they are in a stable, if not exciting, segment of the real estate market with their focus on agency MBS. The strength here is consistency and predictability in income generation, assuming interest rate environments are favorable or well hedged. The weakness, however, always lies in those interest rate fluctuations and the potential for portfolio value decline if rates move sharply against them. This dividend is a sign of current strength, but investors should always look at their broader financial statements, available in their more comprehensive filings like the 10Q or 10K, to understand the full picture of their assets, liabilities, and profitability. What is my take on this? This is a good, straightforward dividend announcement. It reinforces Armour's commitment to returning capital to common shareholders. It is a positive signal for people who invest in Armour for income. The risk, as always with interest rate sensitive investments, is that future economic conditions could impact their ability to sustain these payouts over the very long term. But for now, as we look at this specific report, it is a clear indication that the company is on solid ground for its December dividend. Alright, that is our breakdown of Armour Residential REIT's dividend announcement. What is your take on these numbers and what they signal for the company's future? Do you invest in REITs for income? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.